We can't start investing without knowing what we're investing in. So I've put together a short video of what I consider to be as the four main asset classes in investing, just to get us started on this financial journey. First up, we have the cash class. Now, this is obviously things like physical cash, but also includes bank accounts and other types of money market instruments like certificates of deposits, or another name is fixed deposits, or company commercial paper, bankers' assurances, promissory notes. Um, I know these all sound fancy, but to dumb it down though, they're pretty much all short term loans that earn regular interest and have a repayment period of less than a year. They're considered very safe investments because of how short term they are, but also remember, because of how short term they are, they give a very low return. So because you get a really low return, you don't really want your money invested in them for like extended periods of time, just because the returns generally don't beat inflation. So pretty much in the future, your money is going to be worth less. Next up, we have bonds. So typically, a bond is issued by a company or a government, and an investor can then go and buy that bond, like what's called then a corporate or a government bond. And we can think of it like this. So, say I went and bought a government bond, then pretty much I'm lending the amount I paid for that bond to the government. In return, the government is paying me back regular interest, and we call those coupon payments. And then when the bond expires, the bond period expires, or what we call reaches maturity, then the initial amount I lent to the government, like the amount I paid for that bond, is paid back to me too. Bonds are typically issued for a period of 1 year or more, and because of this, they usually provide a better return than the cash asset class. But also remember, because the period that you're investing in is slightly longer, they are also slightly riskier. Moving into our third asset class, we have my personal favorite, and this is the equity asset class. Now, a stock or share is pretty much a share of ownership in a company. For example, say a company has issued 1,000 shares. Then, if I own 100 of those shares, technically I own 10% of the company, and I am referred to as a shareholder in that company. Now, each share has a value, and the share, we'll call it the share price, and this value is generally a good reflection of the value of a company's equity. But I'm not going to jump too deep into that now, just for the purpose of this video. Historically, equities have provided the highest returns out of all asset classes over long periods of time, but bear in mind long periods of time. But they're also considered the most risky asset class, and this is because you can have huge fluctuations in a share price on a daily basis, and also you always have the chance of a company going insolvent or becoming bankrupt, and that will pretty make the value of your shares completely worthless. This change in the share price on a daily basis is referred to as the volatility of the share. So you can think of this as the rate at which the share price increases or decreases over a particular period of time. And this volatility is directly related to how risky that share is. The word volatility and risk are kind of interchangeable in this sense. For example, say a share has a high volatility, then that means that it has a chance to go up, like the share price can go up a lot in a day, but there's also the chance that it can go down a lot in a day. And because you have this chance to lose a lot, it automatically becomes riskier than a share with a lower volatility. However, one crucial thing is that this volatility kind of decreases over long investment periods. So pretty much the longer you stay invested in the equity asset class, the less risky it becomes. Another thing worth mentioning is this concept called dividends. Now, sometimes a company decides to pay out a portion of its profits to its shareholders, and this money is then called your dividends or dividend payouts. And usually it's a certain amount per share, like 10 cents per share, whatever. It could be anything. Now, the company can pay this out annually, semi-annually, sometimes it's quarterly, but also remember, companies aren't obliged to pay out dividends at all or follow any sort of dividend paying schedule. Lastly, we have the property class. Now, while this obviously includes purchasing physical real estate, due to how inaccessible it is because of how expensive property is, I mean, I'm sure you guys have heard some property prices before, I'll cover physical real estate as an investment in a future video, so stay tuned for that. But in this video, I'll mainly be focusing on what we call listed property, and this is pretty much property companies that are listed on the stock exchange. So we still considering equities, but we are considering property equities. Because these are still shares just in the property company, we obviously still get a return from that share price increasing and then selling that share at a higher price. But on top of this, we can also get income in the form of regular shareholder distributions, so much like dividend payouts, but of the rental income that these property companies earn. So this is the main difference between a property share and any other share, where the dividend payouts are generally not as reliable, and overall this makes property stocks, yeah, I knew I said it right, generally less risky than other equities, just because we know that those distributions are likely to be much steadier. And that pretty much covers the basics. But these aren't the only asset classes that do exist. There are other things like commodities, which is pretty much precious metals and crude oil. There are futures, options, and plenty of other financial derivatives. And there's also that fancy thing called cryptocurrencies. But these are slightly more complex to invest in, so I'll be doing these one by one in future videos. So if you are interested in any of these topics, please don't be afraid to hit the subscribe button to make sure you don't miss any of my future videos. Please drop a like and a comment if you guys learned anything new, or if this video helped you understand what these basic asset classes are and what the general risk is behind them all. And also, if you guys do have any questions, please don't be afraid to drop that in the comment section too.